Yeah, good morning, everyone. So, Friday, even the US market were closed, and on Thursday, market saw some marginal decline. But we had seen quite a few statements from different uh, different politicians. One is Trump has blamed Jevon for Fed chairman, and has indicated that he's looking to remove him before his terms expire, as he is not reducing interest rates. Apart from that, even Beijing, that is China, has warned other countries not to do any unfavorable trade deal with US, which can hurt China. Otherwise, China will also can put up some reciprocal tariff on those countries which has measures which do the deal with the US, which is unfavorable to China. Uh, Apart from that, dollar index is seeing sharp decline. Today it has moved down to 98.5. So that is also pinpointing that money is moving out of US and maybe moving to gold and other countries, which can act a bit positive for emerging market, especially like India, where the impact of tariff is comparatively lesser than other countries. Then Commodities are seeing some positive trend, wherein if we see as compared to Thursday, aluminum is more of a flattish, but copper is up by around 1%. And then oil is also up by around $2. Today morning, iron ore is up by around 1%, and steel is up by around 0.5%. So commodities are seeing some positive trend, maybe because of dollar moving down. And US market futures are comparatively negative. So we had seen a very sharp up move on Thursday. So we may consolidate in today's trade. Now I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note and we're likely to witness some sideways momentum. Last week, we have seen a very strong rally on the Nifty as well as on the Bank Nifty front. Nifty already gained almost 4.5% on week basis, and Bank Nifty closed up nearly by 6% levels on the positive, which gives a very strong indication on the technical front. This rally is likely to be extended as long as Nifty sustains about 23,500 levels on the downsides. So the overall view positive. For today intraday purpose, the first support is placed at around 23,770 Any move below that level will see some profit booking, which likely drag a Nifty towards 23,700, 23,640 levels. Whereas on high side, the resistance is placed at around 23,940. Any move above that level will extend upside alley beyond 24,000, 24,100 levels on the high side. Coming towards the Bank Nifty for today intraday purpose, the first support is placed at around 54,000 psychological mark. Below that level, 53,740, 53,500 may be tested on the downsides, whereas the resistance is placed at around 54,470, 54,770 levels on the higher sides. The overall view on the Nifty and the Bank Nifty will remain a positive. Stock specific, IX really good looks good on the technical front. The stock is trading in formations of the high top high bottom formations. Also, the interesting fact that it has given the rounding bottom pattern breakouts with the very good volumes. We believe that the stock has a potential to reach up to 195 levels. So those who have missed out the buy call last week, they can take a buying position at the CMP as well by maintaining a strict stop loss of a 180 for a target of 195. Another counter, HL, looks very positive on the technical front as well. This particular stock is trading up all the important moving averages, high tops, high bottom formations. We are looking forward for a target of 4470 levels on the higher side. One can go for a long positions at the CMP by maintaining the strict stop loss of 4170. That's it from my end. I request the derivative team to take a call forward.
Yeah. Thank you, Swati. On the derivative front, the highest open interest for calls is around 24,000 levels. Um, yeah, on Thursday, Nifty did move upwards and it reached near that 23,850 odd levels. 24,000 level now holds important resistance in terms of the next 2 3 days. If that is crossed above, you will see a good buying action still coming in again. However, a huge upside has come in already in the last 4 5 days. So there can be some consolidation in Nifty in the next few days, with Nifty being range bound in between 23,500 to 24,000 levels. 23,500 was the highest put base amongst puts. PCR also from zero point 0.7 odd has shot up to 1.2 odd, still at comfortable levels. It still has space to move up towards 1.5, 1.6 odd levels, which is where it will become overbought. So yeah, all in all, the data is still positive. So yeah, awaiting a breakout of 24,000 levels. After that, further buying can be seen. From the stock specific front, we are seeing almost all stocks move up, especially the banking pack. And now banking as a whole has reached an important resistance zone of 54,300, which is also its previous top. A range towards 54,300 to 54,400. This is something that the bank nifty also needs to break above, and if that is done, you can see further buying in even in bank nifty, and probably most of the banks will move up. um, Only couple of banks that probably can still move up, even if there is consolidation, are HDFC Bank and ICICI Bank. Both these banks have broken above important range and they are now trading toward their all-time highs. So yeah, look out for the same. These two banks can do pretty well going forward. So that's it from my side. Like to ask the fundamental team to take over, please.
Thank you. Good morning, everyone. There is an update from the DV's laboratories. It has signed a long term manufacturing and supply agreement with a global pharma company, wherein the company's name is not disclosed due to confidentiality agreement. The company is expanding its presence in custom synthesis, through which it expects to manufacture and supply advanced intermediates. It has planned for capacity addition with an estimated investment of rupees 650 to 700 crore, and which are expected to be funded through internal accruals. This indicates meaningful contribution to company's revenue in the future. So overall, this is positive for the company. Thank you.
Oh, good morning, everyone. So, a couple of results over the weekend. Firstly, Infosys had reported its Q4 numbers, and they were below expectations, wherein the revenues degrew more than expected by 3.5%, and even margins went down 30 bips quarter on quarter. So, Infosys has made two strategic acquisitions during the quarter, and once completely absorbed, will add to the guidance given by the company by around 40 to 50 beeps to revenues. So, management has given a soft guidance of a flattish to 3% growth for FY26, citing challenging macro environment. So we believe this tariff situation is already priced into the CMP of the stock, and for long-term investors, accumulation of the stock from the current levels can be a favorable risk-reward benefits for a longer-term duration. Secondly, Tata Elxsi has reported its number in line with the street expectations. Revenues, as expected, were down by 5.3%. EBIT margins came in at 20.1% versus expectation of around 22%. Company basically operates in three verticals, while transportation and media verticals degrew during the quarter. Healthcare vertical grew by 3.5% on a quarter-on-quarter basis, with new customer wins and traction from the digital and Gen AI kind of offerings. So, company expects this vertical to grow well in FY26 as well. And Alexi management has won some good incremental deals from existing clients, due to which it expects positive growth numbers from Q1 FY26 onwards, and has guided for better FY26 than FY25. The stock is available at 30 times FY27 expected earnings, and the outlook is positive for Tata Alexi. Thirdly, Mastech also reported its numbers, and they were below expectation. Revenue came in at $104.5 million dollars against expectation of $109 million. Margins came in at 15.3% against expectation of 17%. Stock is available at 17.3 times 1 year forward earnings, and there is a con call scheduled at 9 a.m. So we'll update invested accordingly. Thank you. That's it from me.
Good morning. A couple of banks reported its results. Yes Bank results were marginally above expectations. Advances grew by 8% year on year and 0.6% quarter on quarter. Net interest margin came at 2.5% versus 2.4% quarter on quarter, and profits grew by 63.3% YOY. Asset quality improved. GNPA came at flat 1.6%, and NNPA came at 0.3%. So the stock is trading at 1.2 times trailing price to book value ratio. So we are positive for the stock. Also, ICICI Bank results were above expectations. Bank has seen all-round strong performance. PAT grew by 18% YOY and 7% sequentially. Asset quality improved. GNPA came at 1.67% and NNPA at 0.39%. ROA came at 2.5%. Advances grew by 13% while deposit rose by 14%. So the rural portfolio saw year-on-year growth of 5.1%, but a sequential decline of 1.5%. In contrast, the business banking portfolio grew 33.7% YOY. The management stated that business banking is expected to sustain its growth trajectory, while the retail is anticipated to stay stable. The unsecured portfolio is projected to improve starting this quarter. The mortgage portfolio grew by 11%. Auto loans rose by 4.6% YOY. Commercial vehicles and equipment portfolio increased by 7% YOY, and personal loans grew by 4.2% year on year. The net interest margin stands at 4.41% versus 4.25% quarter on quarter. It improved due to impact of interest on tax refund. Margins may be affected by the rate cut cycle. Deposit repricing is expected to lag, while loan repricing will occur immediately in the upcoming quarters. The outlook is positive for the stock. The stock is trading at PE of 17.9 times FY26 earnings and 3.1 times trailing price to book value ratio. So HDFC Bank's result were in line with expectations. PAT grew by 6.7% YOY, and asset quality improved at 1.33%, and net NPA came at 0.43%. Deposits grew by 14% and advances increased by 5% YOY. Average AUM came at 7.3% year on year. The CD ratio has declined from the peak level of around 110% to 96%, and management expects it to glide going forward. Net interest margin is in range of 3.4%, and it is expected to remain within this band influenced by the rate cut cycle. Q1 may see impact of RBI interest rate cut cycle. So ROA is expected to remain in the range of 1.9% and 2%. The CASA ratio came to 35% versus 34% quarter on quarter and 38% year on year. The management stated that improvements in CASA will depend on ongoing rate cut cycle and how the global markets stabilize. LDR is expected to normalize to pre-merger levels, that is 85 to 90% of range by FY27. Asset quality will remain stable. Management expects growth in both deposit and loans to continue, and bank mentioned growth in FY26 will be in line with the system, and FY27 will surpass the system. So we are long-term positive for the stock. The stock is trading at a PE of 19.1 times FY26 EPS and 2.6 times trailing price to book value ratio. Thank you.
Yeah, yeah, Sky Gold has announced another acquisitions. Earlier also they had done two acquisitions, but they were from the group company. But this is the acquisition which they had taken from outside with an investment of 225 crores. The company is Ghana as Gold Private Limited, which is manufacturing bangles. So this will improve their market share in the bangle, which was bit lagging in the Sky Gold manufacturing. Company Ghana is mostly job worker, wherein they get the gold from the company and do job working and manufacture bangles and uh, supply it to the companies. And company has done at such lower revenues in FI of around 85 crores in FY25. Whereas company expect, that is Sky Gold expect FY26 and 27 EBITDA to be around 24 and 37 crores. So that looks very attractive considering the 225 crores of the investment which company is making. That leads to around 10 times EV by EBITDA, which is much lower than the Sky Gold. So this can act as positive for the Sky Gold. Then BHEL has announced their yearly revenue and order booking, wherein the revenue has come at 27,350, which is lower than the market expectation of 31,304, and last year 23,893. As such, revenues are below expectations, whereas the company has secured large orders in the last year and taken the total order booking to around 1,96,000 crores. And last year itself, company has got order booking of around 92,500 crores, which is indicating long-term visibility for BHEL, Bharat Heavy Electricals Limited. So, though the order booking was known, but revenue or executions is getting delayed. As such, it's below the expectation of the market. So that's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, gold prices have already opened gap up around 1300 plus. So prices can test 96 200 96,000 on lower side, and then again witness a pullback. Um, one can maintain a stop loss of 95 800, and on upside again 96 700 to 97,000 is the area where one should book profits. uh, Silver, we are expecting prices to test 96,500 on upside. So buying on dips around 95 300 is recommended with a stop loss of 94 500. And in metal front, copper, we are expecting a range bound movement from 840 to 850. One can initiate a buy on dips around 842, 843 with a stop loss of 838. And in zinc, we are expecting a pullback, so maintain a stop loss of 240, 245. Side, it is expected to test 250, 51 on a higher end. Wherein aluminum also, if prices are sustaining 230 levels, then we expect a pullback till 232, 233 levels. Crude oil, one can witness a pullback from 5400. So buying on dips around 5400 is recommended with a stop loss of 5330. Again, upside 54 70 55,000 is the level where one should book profits. And in natural gas, prices are expected to test 267 to 68 levels on downside. And for a pullback, one can initiate a buy with a strict stop loss of 260. On upside, again, 278, 280 is the target where one should book profits. So that is from us. Thank you very much.